What's going on, everybody? Welcome to Common Sense Living, the show where we discuss financial and economic trends, business topics, gold and silver, and much, much more. So, in this video, I want to discuss why silver needs to be valued by the free markets and not speculative trading, and more importantly, why it needs to be taken off the COMEX or the futures exchange, which it's on. Now, one of the main arguments I hear really about the future exchanges is that they help stabilize prices when there's uncertain demand and supply. And this definitely makes sense for some items that have seasonal supply and demand. And we can look at something like pork bellies, and they were traded on the exchange forever. And then they were taken off in 2010 from the Chicago Mercantile Exchange. And back then, pork belly futures made sense to trade. They were seasonal. The bellies were frozen, set aside. Then they used to make bacon during the summers. Think of bacon, lettuce, and tomato sandwiches. But as the pork belly landscape shifted, and there's demand all year long now for bacon, there's really no need for it to be there on the exchange. Now, silver isn't seasonal in nature. About half the demand for silver, it's from industry, and that's driven more by the economic supply and demand. Now, since a variety of businesses use silver and they're demanding it, we should expect silver not to have these violent spikes like a lot of other commodities, like the argument for a lot of other commodities. Now, the supply could hit disruptions, but that's natural. If there's some sort of shortage with the supply, we would expect the price to go up. Now, another argument I hear in favor of the future exchanges is that arbitrage helps silver as it removes market inefficiency. And first off, what's really odd about this is arbitrage is not really profitable with stable prices. And really silver is it's really a stable asset. So it's ironic when you kind of think about that. Now, if there's a small gap between markets, it's not going to be profitable to arbitrage. And of course, traders are widening the gap in the marketplace, and this really shouldn't be happening. See, the futures market wasn't designed and intended for this. It wasn't designed, for speculative trading and that. It was designed really to reduce risk. Commodities or raw materials and contracts are supposed to allow businesses to hedge risk. It's going to allow for price stability as supply and demand fluctuates. So, say for example, I'm Home Depot and I want to purchase lumber a few months out, and I want to ensure that the price doesn't skyrocket and I take a huge loss. Makes sense for a business like that. Now, the majority who buy and sell silver futures, they're speculators. They're in it to make a quick buck. And we see too much of this naked short selling. And again, when you short an asset, you want the price to decline. They're borrowing on margin, so they don't actually own it. And once that price drops, they can go back in and they can buy it at a lower price. So speculators are really driving the price of silver rather than free market supply and demand, which should be driving it. Now, the exchange has a history of dumping commodities that are thinly traded. We saw this with pork bellies somewhat, but silver is so profitable, they're never going to want to give this up. So, how could silver be priced? So, in my opinion, simply allowing the price to be determined by the free market is the best way. Now, in reality, it's just follow the same pattern as any good. It's really not that complicated. It should flow from the mining companies to the mints to the wholesalers and then eventually to retail. And the natural price is going to be discovered this way. If somewhere in the chain someone's charging too much, then they're going to go to another supplier or for in the example of a retail seller, if they're buying from a wholesaler and the wholesaler starts jacking up the price, then they're just going to switch wholesalers. And it's the same thing with the wholesalers and with the mints. If the demand's not there for a certain mint, they're just going to switch. They can just switch. Now, some retail sellers might decide to work only in bulk and to sell to industry, or wholesalers might do this. And some may argue there might be different prices being established, but the market's going to figure it out. The free market's always the best way to decide. And I'll concede that industry might get a better price um, than a retail item, but this is really no different from if I'm buying in bulk from a wholesaler. Discounts, it makes sense to give discounts in those cases. So we're not going to find out the true price of silver until it's established by the free market, not by speculative trading. Thanks for watching. As always, let me know your thoughts. Please comment, like, subscribe. Thank you.